Okay, so let's say the market has crashed. वैसे भी बहुत लोग आजकल इस पे वीडियो बना ही रहे हैं. So say that भविष्यवाणी comes through, which means equities, mutual funds, stocks, these are a lot cheaper now. But the problem is आपके पास पैसे नहीं है. So the problem is how to get more funds. Obviously, it doesn't make sense to redeem anything at a loss, so that's not an option. Maybe you can take a personal loan or max out your credit cards, but that's going to be very expensive. तो करे तो क्या करे? And that's where a third option comes in. Yes, it's a loan, but not any kind of loan. It's one that doesn't require you to liquidate your mutual funds. It charges interest only on the money that you use. This option allows you to retain any dividend that you make on those funds, and the interest rate charged is a lot lower than personal loans. Yup, I'm talking about loans against mutual funds. LAMF, that allows you all these advantages, and much like any secured loan, its workings can be summed up in 3 simple steps. Step 1, like all secured loans, we start by estimating our loan eligibility limit, which is of course a function of one's mutual fund corpus. Step 2 is where the MF units are pledged in favor of the loan provider, who then sets up a lien over these units in the system. And when all of this is done, the final step is the actual disbursement of loan, which can be a transfer to your account via NEFT, or as many financial institutions are doing it now, it can also be in the form of a credit limit. So essentially, your mutual fund units act as a security which the bank or NBFC will hold until you pay back the loan. And if you're unable to repay the loan, the provider retains the right to sell those units to recover its money. Of course, this is a very simplified overview, but like me, if you too are a mutual fund investor, then I'll suggest you watch this video until the end as I take you through the many details, including the eligibility, loan limits, how to apply, how to access your account, the interest rates, how to pay, how to repay, and a lot more. Let's begin. Okay, so who's eligible for a loan? Anyone. Anyone over the age of 18 years who has money invested in mutual funds can apply for a loan. But as you might have expected, the final disbursement will be subject to certain terms and conditions as defined by the loan provider. For instance, in the case of equity mutual funds, most loan providers allow only individuals to apply. However, for debt funds, the lenders are more flexible, accepting units from not only individuals but also from partnerships, Hindu undivided families, sole proprietors, and even companies. Now, these loans against mutual funds are offered by many institutions. Popular banks like HDFC, the State Bank of India, ICICI, Bank of Baroda, all of these guys offer this product, as do the bigger NBFCs like Bajaj Finance, Tata Capital, and others. So, while there's a wide choice of institutions, the range of mutual fund schemes they accept is surprisingly limited. What I mean is, many banks and NBFCs have a list of approved mutual fund schemes, and the loan is provided only against those particular schemes. For example, ICICI Bank and SBI accept only those schemes where the AMC is registered with CAMS, which means if you have units in Axis, Motilal Oswal, Mirae Asset, UTI, Nippon, etc., then these two banks won't be able to give you a loan against those particular units. My point is, every bank, every NBFC will have their own TNCs and approved schemes. So if you're applying directly with a provider, then please be prepared for some inefficiencies. Which brings me to Yenmo, the sponsors of today's video and an LAMF platform that makes this process super efficient. A Y Combinator backed company, Yenmo was founded by Ashutosh and Aryan, engineers from BITS with extensive experience in fintech and in building great products. The entire process is 100% digital, right from the eligibility to KYC to pledging of units, the dispersal, and you can even extend limits and manage your loan from the app itself. With two of India's biggest NBFCs as its partners, Yenmo offers attractive interest rates at just 10.5%, which is a lot lower than what a personal loan charges. There aren't any foreclosure charges, no prepayment fees. The payment terms are super flexible, and if you're lost somewhere, you can always connect with the helpful folks at Yenmo's customer service team. And as a special offer to all viewers, Yenmo is offering a 500 rupee cashback on your first withdrawal transaction with them. By the end of this video, if you find yourself convinced about the benefits of LAMF, I highly urge you to set up your Yenmo account today. It's free, it's super useful, and as always, the link to this platform is available in the video's description. Right, so let's get into the details, and the amount of loan a mutual fund unit holder is eligible for largely depends on two factors. A, the type of mutual fund scheme, and then there's the lender's internal policies. With regards to scheme type, every institution has a slightly different limit, but typically for debt funds, lenders offer a loan limit of up to 80% of the NAV, while for equity funds, this is around the 50% mark. You don't have to calculate any of this yourself. Just go to the Yenmo app, tap on check eligibility, enter your PAN details, DOB, type in the OTPs, and that's it. So in my case, the eligibility comes to 2.25 crores. That's the maximum I can borrow. But notice there were some 20 lakhs worth of schemes that weren't eligible, and these were mainly ELSS, the tax saver funds, which is of course good information to have. Of course, this eligibility number, both in terms of the amount and the percentage, these might vary from provider to provider, and it clearly depends on their internal guidelines and pricing policies. The other thing I want to point out here is the loan itself. You see, when we generally avail a loan, let's say a personal loan, the lending institution would either transfer the loan amount to your bank account via NEFT or else a check is issued. However, in the case of LAMF, the lender in most cases does not transfer any money to your account or give you a check. Instead, the bank would open up a current account and assign you an overdraft limit, while if it's an NBFC, then a credit limit is made available to you. This is what happened when I applied on Yenmo. I applied for a 1 lakh limit which was routed via Bajaj Finance, and after all the processes were done, indeed an amount of 1 lakh was made available to me. Now it's up to me whether I want to withdraw that entire 1 lakh or use up a part of it, which is exactly what I did when I availed a chota loan of 20,000 rupees from my overall credit limit. Of course, the beauty of this is that because I've borrowed only 20k, the interest will be charged only on this amount and not the entire 1 lakh limit. This flexibility is a big plus point for loans against mutual funds, especially when one compares it with a personal loan where the borrower has to extract the entire 1 lakh rupees and pay interest on it completely, even though at that time you might require only a part of that money. In fact, a use case, especially for people like me, self-employed people like me, who have cash coming in and going out. Okay, figure this. So let's say I have zero money in my bank account today, which is why I have borrowed 20,000 via the Yenmo app. Now let's say one of my invoices gets cleared next week and I receive 30,000 from a brand. The good part is that I can then use this 30k to clear off my outstandings without having to pay any prepayment charges, and all this LAMF facility costed me was just 1 week of interest, and that too is calculated at just 10.5% per annum, and I didn't have to redeem any of my long-term mutual fund units. I'm sure there are many use cases like this: emergency fund, purchase of appliances, the stock markets, and from what I've heard, using money from these loans to buy IPO shares and selling them on the day of listing for a 10, 15, 20% profit is an HNI's favorite pastime. But just to close loop this, and a question I'm often asked is, what happens to the credit limit if the stock market were to crash by some 50-60%? It's a very valid question. I've myself experienced a nifty crash over 50%. And in such cases, okay, remember my eligible investments were some 4.2 crores? Well, firstly, that corpus would go down to say 2 crores, and if by then I had already maxed out my 2.25 crores of limit, then not only will I have to pay that gap of 15 lakhs to the lender immediately, but I'll also have to work out a plan to pay some more money to bring the credit limit percentage to an acceptable level, which is currently around 100%. I'm not getting into specifics here, but yes, I can tell you this: banks and NBFCs who do LAMFs, they always do a periodic review of the fund value and the corresponding credit limit, which often happens on a weekly or fortnightly basis. So it's a bit like what I do with my newsletter. My researcher and I examine a bunch of stocks, we project the revenue, match it with the valuations, build an investment thesis on different parameters, and once we are convinced, I present it to you and 45,000 more subscribers in a readable format. The writing is good, many of the stocks are doing extremely well, and if you haven't subscribed to my newsletter yet, then kindly do so now and also tell your friends about it. Alright, so how does one apply for a loan against mutual fund? Now, there's a ridiculously simple way of doing it, and there's an outrightly complex method as well. The complex approach is our old school offline methodology, which requires an applicant to approach a bank or an agent, submit KYC documents like address proof, photographs, etc., submit a mutual fund holding statement, sign a pledge form, and in some cases, submit an income proof such as a Form 16 ITR, etc. It's pretty time consuming, especially the collection and verification of documents. Then all of this has to be sent over to the underwriters. Then the loan processing team takes it to the registrars for marking a lien, etc., etc. The faster and easier way of applying for an LAMF is, of course, doing it online. With many institutions integrated with each other, the banks, NBFCs, scams, K-Fintech, DigiLocker, Aadhaar, because everything is API'd, applying, marking a lien, processing of the loan and receiving the money is entirely digital and a matter of minutes. Okay, not minutes, but it's definitely quick enough. And when I tried it for the first time on Yenmo, the entire thing was done in less than 24 hours. So here's how I went about it. Okay, so step one is eligibility, and I've already showed you how it takes like 10 seconds to receive your eligible credit limit. Step two is where I select the amount of loan. I could have chosen up to 2.25 crores, but because I'm testing this out, I went with 1 lakh rupees. Of course, I can increase this 1 lakh limit at any time as well. And remember, this is just a limit, which means I'm free to withdraw a much smaller sum, which I'll show you in a bit. Step 3 is the selection of scheme for lien marking, and for me the system automatically selected the UTI transportation and logistics fund, so that's what I went with. I then review the loan details. Please notice there is a one-time processing fee of 1179 rupees, that's 999 plus GST, but this is only on the first transaction and subsequent withdrawals will not have this charge. I've tested this also. The next step, step 5, is the fetching of documents for which Yenmo uses DigiLocker. Then comes the bank details, my personal details, some additional details. Step 7 is the e-agreement, which is a massive stack of online documents that Bajaj Finance presented to me for review, which frankly no one reviews, so I'll just go through it like zrr. Then there's an e-mandate registration, lots of OTPs, lots of WhatsApp messages from Bajaj Finance. There was also a video KYC, which I must say is a very smooth process, and that's it. By the evening, I could see my 1 lakh limit on the Yenmo app. And here's the cool part. Now that the lender interaction is done, I can manage everything from the app itself, which includes changing my credit limit, prepaying my loan or a part of it, and of course to withdraw some money. So let me tap on withdraw. Let's go with 20,000. I review the details. Remember, there's that 1,179 rupee processing fee on the first transaction. I swipe to transact and then I wait. Notice the request was sent at 4:22 p.m. and according to the fact that the loan processing does take some time, I was happy to see the money hit my account at 8:57 p.m. So this took me 4.5 hours. On the weekends, this might take a little longer, so please be a little patient with it. But from what I've heard, this will eventually move towards instant processing in a few months from now. Anyways, as this was all happening, I received a host of email communication, first from Bajaj, which was on the loan application, agreement, welcome letter, etc., and also from UTI Mutual Fund. In fact, look at this PDF where UTI has marked a lien on some 771 units. So 771 multiplied by the current NAV of 288 rupees comes to 2.25 lakhs, which means, and this is just me being curious, but what it means is that the percentage of credit limit offered to me was 45% of the fund value in this case. Anyways, this is the entire process. It takes less than a day to set up and receive the money. But yes, the first time you try it, it will be a little procedural. It might take an extra day, so please be a little patient. But having gone through this process, I can now see how having an LAMF limit is a rather useful thing to have. Alright, so let's look at some of the more commonly asked questions. I'll be a little quicker here. And question number 1 is, will I continue to make returns on my pledged investments? And the simple answer is yes. You will continue to receive returns in the form of capital appreciation and dividend, which is another reason to consider a loan against your MF for your temporary money requirements rather than redeeming units. Okay, next question, is Yenmo safe? It's an important cue, so let me break it into two parts. The first pertains to the application, the platform itself, and while there is no guarantee of anything, one should definitely take into account that as an instrument, loans against mutual funds are RBI regulated and there are strict rules that all participants have to comply with. Unlike a lot of other apps, Yenmo isn't intrusive, as in it does not ask for access to your camera, SMS, photo gallery, etc. And we really can't ignore the fact that two of India's biggest NBFCs, Bajaj Finance and Tata Capital, have partnered with Yenmo, and believe me, I've seen it from my ET Money days. These folks take their compliance and audit quite seriously. That said, the second part and a very relatable question is, will my mutual funds be safe with Yenmo? Again, it's a yes, and that's because Yenmo does not hold any of our pledged mutual funds. In fact, all our mutual fund holdings are there with the two registrars. So when you and I pledge our mutual funds, only CAMS and K FinTech have access to it, and it's at their end that a lien is marked, as I showed you in the UTI example. If you have any more questions around this, please feel free to type them in the comments box below, and I'll definitely have someone from Yenmo to answer it. The next commonly asked question is on the interest rate, and at Yenmo it's 10.5% currently, and I also went through different banks and NBFCs, and generally this is in the 10 to 13% range. Next up are the fees, and other than the one-time processing charge, Yenmo does not charge anything else, as in there aren't any foreclosure, withdrawal or prepayment fees. I'll say this is a great deal because some of the institutions I checked had a much higher number, and some were charging fees as a percentage of the loan amount itself. Having said this, and even if done via Yenmo, there might be a few extra charges that the lender might apply, but these are applicable only in exigent circumstances like bounce, liquidation, penalty, etc. And you can read more about this in the lender's agreement I referred to earlier. Right, so while loans against mutual funds are quite popular amongst HNIs, it hasn't really reached the masses, the retail mutual fund customers who still rely on expensive personal loans and credit cards for their lending needs. I'll say it's the lending institutions who have done a very bad job of marketing it, but one can understand why. The spreads aren't that great for this product and for banks and NBFCs, so it's largely ignored there. But now, thanks to apps like Yenmo, we can take advantage of this product, do everything digitally, and access loans at a low interest rate of just 10.5% per annum. In my opinion, there should be absolutely no qualms on your part about exploring LAMF. But if you're still having some doubts, then here's a 10-point checklist that will help you arrive at the right offering for you. Once again, thank you for your time. I sincerely hope you learned something new today. Do remember there's a 500 rupee cashback on your first transaction on Yenmo. Do like this video, do subscribe to my newsletter, and I'll see you very soon. Until then.